This podcast is for informational purposes only and does not constitute financial advice. Consult with a qualified professional before making any investment decisions.
Welcome to the Wire Weekly Roundup. The week in real estate presented in digestible bites. Hold on while our AI hosts take us on another ride through this week's top real estate headlines.
Welcome back to The Wire, everyone. Your essential connection for, well, trying to get a handle on this real estate market.
Definitely feels like you need a good connection these days.
It really does. And this week, it threw us a bit of a curveball.
Yeah.
We saw this headline that just jumped out. Fed's shock move. Why mortgage rates are still costing you thousands.
Yeah, that catches your eye, doesn't it? A shock move sounds big, maybe good, but then, bam, still costing you thousands.
Exactly. It's that contradiction. That's what we want to dig into today.
Absolutely. That's our whole mission here with this deep dive, isn't it? To cut through that kind of noise from the past week. We sift through it all to give you a clear, concise, and hopefully really actionable understanding of where things actually stand, what these shifts mean for you.
Think of it as your shortcut to being properly informed, hopefully staying ahead of the curve.
Right.
And we really do mean a deep dive. We've gone through, let's see, everything from August 18th to the 25th. Stacks of sources.
The usual suspects and more.
Yeah, CNBC, Bigger Pockets, Eye on Housing, Rise Media, even Canadian Real Estate Magazine, World Property Journal, the lot.
We try to cover the bases.
So let's get into it. That headline first. Fed's shock move. What exactly was this move? Because initially it sounded like, maybe some relief.
Well, what happened was Fed Chair Powell gave this speech on August 22nd, and the market read it as very dovish.
Okay, dovish meaning?
Meaning signaling caution, hinting that maybe, just maybe, rate cuts could be coming down the line. He mentioned evolving circumstances, and, the market loves hints like that.
Ah, okay, so the hint of future cuts was the shock.
Pretty much. It sent this wave of optimism rushing through instantly.
Yeah. So if the Fed chair is hinting at cuts, that sounds like a green light, doesn't it? Like, finally, some good news for buyers and homeowners.
That was exactly the initial reaction. It was swift, really enthusiastic. We saw reports between the 20th and 22nd showing mortgage rates actually dipped a bit.
Okay.
Real estate stocks, they saw a nice jump. Homebuilder stocks rallied pretty significantly, too. Right.
There was this definite sense of, okay, maybe things are turning.
Yeah.
Lots of chatter, on CNBC and elsewhere about maybe getting ready to refinance, things like that.
Okay, but then there's the second part of that headline. The still costing you thousands part. If the Fed's signaling easing, why are rates still such a huge hurdle? What's the disconnect?
That is the million-dollar question, isn't it? Because the reality on the ground felt very different from that initial burst of excitement. Even with rates hitting what was like a 10-month low around August 20th, CNBC was asking, why are home buyers still on the sidelines? And weekly mortgage demand. It stalled again. Housing Wire. Logan Mohtashami over there, he put it bluntly on the 19th, said something like, mortgage rates are too high to get things moving again.
Wow. Okay. So pretty clear.
Yeah, and it wasn't just him. Bigger Pockets was saying something similar on the 18th, arguing that waiting for rates to fall is actually costing you thousands. And it feels like, maybe rates dip a tiny bit, but not nearly enough to really open the floodgates for demand. So the rates nudged down, maybe, but not enough to make homes truly affordable for most people. Is affordability still the main roadblock?
Oh, absolutely, without a doubt. Zillow senior economist said it flat out on the 19th. Affordability is still the main issue.
Right.
And Eye on Housing confirmed it on the 21st. They found new and existing homes were still largely unaffordable in the second quarter.
But didn't the Redfin CEO say affordability improved? I thought I saw that.
They did, yeah. He mentioned on the 21st that affordability improves, but look, for many people listening, especially if you're in a high-cost area, that improvement might feel, pretty insignificant.
Like a drop in the bucket.
Exactly. You have to look at the regional differences. National averages can hide a lot of pain. A slight tick upwards nationally doesn't suddenly make a house affordable if you've been priced out for years.
Makes sense. And complicating things further, there was some political noise around the Fed this week, too, wasn't there? Stuff about President Trump, Fed officials.
That's right. We saw reports, CNBC covered them, about President Trump calling for the firing of Fed officials Lisa Cook and Powell. And there were also these accusations of mortgage fraud against Cook.
Okay. Now, we're just reporting this, obviously not taking sides.
Absolutely not. But it's important context, because while these things might not directly change monetary policy tomorrow, they definitely affect market psychology. Any whiff of instability or political interference around the Fed, it makes people nervous. Buyers, investors, everyone gets a bit more hesitant.
Adds another layer of uncertainty.
Precisely. And uncertainty tends to slow things down, even if the economic numbers haven't fundamentally shifted yet.
Okay, so let's try and tie this first theme together. What's the big takeaway for our listeners about the Fed, rates, and affordability right now?
I think the key takeaway is this. Yes, the Fed is signaling a softer stance, more dovish. But the actual impact where it matters for homebuyers, for the market on the ground, it's slow, it's really complex, and it's definitely not happening evenly everywhere. So if you're a real estate professional, you just can't rely on those big, broad headlines. You need a strategy that's super nuanced, really specific to your area, because for a lot of potential buyers, it's still a very tough environment out there. Affordability is, well, it's still the elephant in the room.
Okay, that's clear. Now, shifting gears a bit, let's zoom in from the big economic picture to look at how you, the real estate professionals listening, are actually navigating all this.
Yeah.
Because the tools you use, the way teams are structured, that's changing incredibly fast, isn't it?
Oh, unbelievably fast. We're seeing this huge acceleration, especially in technology. It's really noticeable.
Like what specifically?
Well, AI is a big one. Real Estate News had a piece on August 23rd about how AI can bring down the learning curve for agents. Think about that. AI isn't just some abstract idea anymore. It's actually making agents more efficient, helping with workflows, making the client experience better. Like Bold Trail unveiled an AI home search just a couple of days before that.
So tools are getting smarter, helping agents work faster. What about the people side? Teams, brokerages, how are they changing? Are agents sticking with old models or looking for something different?
Yeah, we're seeing big moves there too. Real Estate News also reported, I think it was the 23rd, about 3 real teams uniting. And an independent brokerage down in Florida managed to grab a top agent to launch a new office.
Interesting. So consolidation and growth.
It points that way, yeah. A trend towards bigger, maybe more integrated teams. Brokerages are definitely active in trying to attract talent. It feels like there's a push for, synergy and efficiency in this tougher market.
What do agents want from their brokerages now? Is it just about the money, the commission split?
Not anymore. Not just that. There's a study mentioned by Mike DP on the 21st looking at exactly that, what agents really want. And Realty Times talked about the personal is professional as a success model. It suggests agents are looking beyond the split. They expect real support, cutting-edge tech, good training, and, importantly, a brokerage culture that actually helps them grow personally and professionally. It's about the whole value package now.
So better tech, more support. But at the same time, it feels like there are some really deep fundamental fights happening over the industry's basic structure.
Exactly. And that's the really fascinating tension here. On one hand, you've got these forward-looking moves like the MLS picking a new name to reflect the future of real estate. That was on the 22nd, clearly trying to evolve. But then, at the very same time, you have these massive, almost existential battles brewing. The whole fight over mandatory NAR membership, that's heading to appeals court, reported on the 19th.
Right, that's huge.
And then on the 20th, you actually had a CEO calling for MLS freedom from realtor control.
Wow. These aren't just minor disagreements. These could fundamentally change how the entire industry works, how agents operate, how listings are handled, everything.
They absolutely could. And that's the surprising insight, I think. This contrast is so stark. You've got the industry racing to adopt cutting-edge AI for efficiency, while simultaneously being locked in these deep, almost primitive battles over its own rules, memberships, and data control. It's like trying to put a rocket engine on a horse-drawn cart in some ways.
That's a good way to put it.
It creates this incredible tension, innovation versus legacy systems. So for professionals listening, it means there are huge opportunities opening up with tech and new models, but also some really significant roadblocks tied to these older structures and ongoing fights. It's a real paradox.
A time of paradox, okay.
Yeah.
That contrast is really something to think about. Now let's zoom out again. Look at those bigger market drivers, demographics, niche opportunity, things you and our listeners are always looking for. What's jumping out there?
Well, something that's maybe underappreciated but just undeniable is the impact of the aging population. It's huge. Bigger Pockets reported on August 22nd that the 55 and over group is America's fastest growing renter demographic.
Fastest growing.
Yeah, think about that. It's not a small shift. It's a massive way of reshaping rental demand.
And it's not just renters, is it? We saw a ton about senior housing specifically this week.
Yeah.
Seems like a major growth area.
Oh, absolutely major. CNBC was all over it on August 19th. They had videos like "Baby Boomers Drive Senior Housing" and pieces stating the senior living housing market can't keep up with demand.
Can't keep up. That's significant.
It is. Another piece asked why senior housing could be the next real estate play, called it a big property play, where aging boomers mean big business. So for anyone listening, this isn't just a statistic. It's a flashing neon sign for a growth area development, sales, management, all catering to this growing need. And
related to that maybe is the whole idea of wealth transfer.
Yes, exactly. CNBC touched on real estate wealth transfer family on the 23rd. This has really long-term consequences. As property assets move between generations, it's going to shape investment patterns, demand for certain types of homes, and definitely how you build client relationships for years, even decades to come. Understanding that generational shift is crucial for long-range planning.
Okay. What about specific investment strategies? Anything changing there? Maybe things that were hot or cooling off?
Definitely seeing some shifts. Canadian Real Estate Magazine, for instance, highlighted maximizing value through customization and pre-construction, getting in early.
Adding value from the start.
Right. But on the flip side, the fix and flip market seems to be pulling back quite a bit. CNBC reported on the 21st that fix and flip real estate investors pull back.
Why is that, do you think?
Well, it's not too surprising, really. Holding costs are higher with interest rates up. The market's generally more cautious. So the profit margins on flips get squeezed. You really have to, sharpen your pencil and know your numbers extremely well, or you risk getting stuck holding the bag.
Makes sense. What about short-term rentals?
Yeah.
Airbnbs. Still the golden goose.
The tone there is definitely more cautious now. Bigger Pockets had articles like, "Don't rely on Airbnb's algorithm to make you rich."
Okay.
And they discussed how Airbnb's own Q2 results signal slower growth ahead. That was around the 18th. They also talked about the hidden dangers of property vacancies, reminding people that an empty property costs more than just lost rent.
Right, the carrying costs add up fast.
Exactly. So the message seems to be realistic. Assess the risks properly. It's not the guaranteed gold rush it might have seemed like a couple of years ago.
Good advice.
Yeah.
Now, we always say real estate is local, local, local. Any specific geographic details or maybe surprising local factors that caught your eye this week?
Oh, yeah. The local angle was crystal clear. Zillow's report on the 8/10 said it all. Home values are rising in half the country, falling in the other.
Wow, a 50-50 split nationally.
Pretty much. It just hammers home that you cannot paint the whole country with one brush. National averages mean very little for your specific street. Then you look internationally. Tokyo saw a property price surge, leading to calls to curb foreign buying. That was the 21st. Meanwhile, CBRE saw positive signs coming back in Hong Kong commercial property on the 22nd.
Interesting contrasts.
Definitely. And even drilling down into niche commercial sectors like the U.S. data center report for 2025 from World Property Journal on the 19th, it highlights these very specific investment opportunities driven by digital infrastructure needs. It all proves you need that granular, local, and sector-specific knowledge.
Absolutely. And beyond location and race, what about those other, maybe more subtle things that impact value? Schools, patios, even safety.
Yeah, those came up too. Bigger Pockets reminded us how top-rated school districts generate higher home values.
Oh.
Always a powerful driver. Realty Times talked about patio appeal, adding value, hitting on that lifestyle aspect.
Sure.
But also, critically, World Property Journal covered Redfin's 2025 homebuyer report, pointing out the impact of personal safety and crime on homebuyers.
That feels increasingly important.
It does. And on a similar note, another World Property Journal report from the 20th looked at cities at risk of wildfires in 2025. It's a stark reminder that environmental risks are becoming major factors in value and insurability. These aren't side issues anymore. They're core considerations for buyers, sellers, and for the professionals guiding them.
Okay, so we've covered a lot of ground. The Fed's mixed signals, the tech shifts and industry battles, the demographic waves, and all these local nuances. How do we wrap this all up? What's the big picture from this week's deep dive?
I think the big picture is crystal clear. This market is incredibly fragmented. It is anything but uniform. If you want to succeed right now, it really comes down to understanding the very specific local impacts of big economic policies. It means embracing technology like AI, not fighting it. And it means strategically responding to those powerful demographic shifts, especially the aging population and senior housing needs. It's just not enough to know the national trends anymore. You need precision in your analysis and real agility in how you operate. It demands a much more sophisticated approach than maybe even a few years ago.
Precision and agility. That's a great summary, a powerful call to action for everyone listening. And as you head back out there into the market this week, we want to leave you with something to chew on, a provocative thought.
Okay.
Given all these conflicting signals we've talked about, the sheer speed of tech change and these undeniable demographic forces, how will you take these insights and spot the next big opportunity for your clients, for your own business? What's that untapped niche or that innovative strategy that could define your success in the coming months? Think about it. We'll see you next time on The Wire.
If you're interested in your own personalized edition of The Wire, please visit us at thewire.fm/custom. We offer market-specific podcasts with all the latest real estate news and market analysis delivered to you weekly or monthly. Own your market with a personalized edition of The Wire, the week in real estate. Thank you for listening.